You're online. Nadia, please start.
Hello, everybody. So we start today our panel discussion, Fundraising in the Era of Pandemic, as a part of a roadshow. Hello, everybody. So we start today our panel discussion, Fundraising in... And today I have our honorable participants for the investor panel. It's Adrian Niculescu, the Regional Director, UK and Romania Faster Capital, as a co-moderator today. Myself, Nadia Nesterova, Independent Director of the Board of the National Alternative Investment Management Association and advisor to a number of leading GPs in hedge funds, private equity, venture capital. And investor panels include Mandy Shimfrin, shareholder relations of Hard Capital, Abhijit Kumar, co-founding partner of AH Ventures, Marco Lima, partner of Virtu Equity Partners, Devang Mehta, partner of Anthill Ventures, David Reece, general partner of IZY Capital, Anup Jain, managing partner of Aureus Venture Partners, Zachary Reece, managing partner of Lotus Investment Strategies Global. And we have two projects today, which will present their presentations during the second part of our today's event. It's Giovanni Buono, CEO of Fundsty, and Venkatesh Krishnamurthy, CTO of Space IZ. So I will start out today's panel discussion with a brief introduction of each of the panelists for investor panel today. And Zachary, could you please introduce yourself?
Yes, just to give you a brief introduction, first we want to say thank you to LA Token for having us. But here at LIS, we really have taken a venture capital approach here during this difficult time, rather, being an investment bank that does welcome institutions on a large scale. Our shifting economic strategy through this difficult time has proven to be results oriented, and we're happy to share that with you and your audience today.
Thank you so much. And Devang?
Yes, hi everyone. Thank you, Nadia. I am Devang Mehta. I'm a partner at Anthill Ventures. We are a speed scaling ecosystem. We invest in and scale early stage companies at pre-Series A and Series A, largely in healthcare, media tech, and urban tech. Thanks.
Thank you. And David?
Yeah, hi. I'm David Rees. Thanks very much for inviting me on the call. Yeah, for sure. Interesting times. It's always, I've been around looking at venture and technology for 30 years. And it's a time of great opportunity. In terms of what we do, we're early stage ventures. So basically up to Series A, Series A plus. Our sector focus is largely healthcare, has been for 4 years. We do look at stuff in blockchain. We do stuff in infrastructure as well. Excuse me, my voice isn't very good. I don't have COVID-19 though. So.
Thank you so much, David. And Anu?
Yeah, hi Nadia. Thank you so much for inviting me over here to this forum. I represent Arias Venture Partners. We are an early stage venture capital fund based out of India. We tend to invest in large markets, tech enabled. We are early stage, we are diversified. So that's what we do. Happy to be here in the forum. Thank you.
Thank you. And Abhijit?
Yeah. Hi, Nadia. Thanks for having me here. I am co-founder of AH Ventures. AH Venture is one of India's largest early stage fundraising platform. We're sector agnostic and we help startups raise up to $10 million. Thanks.
Thank you. And the first question would be, what are the most promising niches, sectors for starting business in the current environment? Anu?
Yeah, I think this is a bit of a toss, but if we crystal gaze, I think health is on everyone's mind, and digital therapeutics is one area that's picking up. We've logged off physical schooling and physical education, so that certainly is an area which has come up very nicely. China's past experience shows that post-COVID, gaming picks up as a form of entertainment. Both real money and otherwise social gaming platforms really boom, and we've seen that in India as well. So I think these are some of the areas, and yeah, the panelists could speak about some few more, but I'll leave that to them.
Thank you. And Devang?
Yes, I echo that to a great extent. I manage the healthcare vertical here at Anthill, so we're seeing a lot of interest and business plans geared towards healthcare, health tech, overall holistic wellness, the need to live in a clean environment, to commute without fear, to preempt disease, and then if you get a disease, how to cure it as quickly as possible in the future, of now and in the future, through the most advanced healthcare and health technology. So there's a lot of interest at all levels, including startups, government, institutions, sovereign funds, as well as VCs and Ps like us in healthcare and health tech.
Thank you, Devang. And Abhijit?
Yeah, I think adding to what Devang and Anup has said, I think consumer products focusing on mainly sanitation, cleanliness, that would also pick up heavily, especially in India. On top of that, automation products heavily focusing on maybe B2B sector, that will pick up drastically. Other sectors, both have already pointed out. Thanks.
Thank you. And Zachary?
Yes, from our standpoint, where we've seen the greatest returns here over this difficult period has really been surrounding rather 5G with telecommunication advances that allow between 40 and 60 times increase of upload and download speeds. We've been focused on content creation, telemedicine, telecommuting, things of that nature. I would say other sectors that go along with those telecommunications advantages would be things like the defense sector, potentially space activity, and ultimately satellite investment as well for us here over the short term to the next 6 to 12 months for sure when it comes to our portfolio.
Thank you, Zachary. And David?
Yeah, I mean, it'd be tempting to say what everybody else said and to follow the herd into healthcare, but look, there's plenty of opportunity out there at the moment. The market is ripe from a valuation perspective, but specifically, our focus is on genomics and personalized healthcare. We are a platform investor, and we see a fusion of omics and cell biology with personalized healthcare as probably the biggest investable trend in the world for the next 20 years. So that's the one we are playing.
Thank you. Adrian, would you introduce yourself? Okay, we will move on to the next question. So next question is also a question to all. So which opportunities different types of investors look for as part of your observation in the current market? Zachary?
So if you could clarify, are we talking about specific aspects of companies, or can you clarify just a bit there?
In terms of the current environment, do you think how different types of investors react on the current situation in terms of their investment preferences as part of your observations, if you have any?
Understood, and I appreciate that clarification. From where we sit currently, we see two different types of investors. By and large, we see institutional investors that are playing the long game. They have been in cash for quite a while, in some cases 12 to 18 months, preparing for a downturn in the market, really anticipated not the pandemic, but the sovereign debt crisis. Then we have retail investors, which from our observation, we have become much more. We've actually seen the market expand quite a bit compared to the last 6 to 12 months.
And for instance, if we talk about these retail investors, do you think there is a capacity for them to substitute institutional money when markets shut down, to your mind?
I think by and large, it's going to be very difficult for that to occur. And the reason I say that is due to the significant rise in unemployment and the dramatic pullback on the free money to be spent on consumer products. What you're starting to see is individuals who have no savings, who have in the US on average about $38,000 worth of debt, and they have nowhere to pull liquidity from. And that's what makes it difficult for the retail investor.
Thank you, Zachary. And Abhijit, what is your way of observing that? So in terms of maybe a shift in the interest of different types of investors during the COVID and on the retail investment sector?
So, specific to India, India is anyways, due to COVID, real estate is gone down. It's been going down for the last few years. And even share market is behaving quite erratic due to COVID. So I think both institutional and in real estate, retail investors would move to newer opportunities in India at least, because at least startups still have return guarantee if they move to sectors like healthcare or automation and things like that. As far as retail investors substitution, I think more and more retail investors would come in India who would get into startup investments, because the normal mode of investments, which is heavily real estate in India, people invest heavily in real estate, mutual funds. Those are not, might not be giving standard returns in current times. Thanks.
Thank you, Abhijit. And Anu, what's your observation on that?
Yeah, thank you, Nadia. So I think the opportunity is different, types of investors. Certainly us, we would look at this point of time is, I think someone mentioned that the valuations at this point of time would look softer. We would look at also companies which are going into Series A. And because of COVID, some of their fundraising plans have been delayed, but they've got a product market fit. And maybe we can play a role over there, come on the cap table. Maybe we missed them in earlier. On the second part of your question on retail investors, I agree, with Zach as well. And generally, there is economic hardship around the world because of COVID. And even though the savings rate in India is quite high as compared to the other countries, but everyone's sort of pessimistic about their jobs. There are pay cuts, etc., all of that. So I think institutional money is still going to drive the markets, and there's going to be a balance between who takes the exchange risk, the currency risks, and how do you move money around between different assets. I think it's over the last 60 days, we've seen a lot of asset repricing take place already in various parts of the market. I think Abhijit mentioned about that. So we will continue to see that for a good 6 months, and investors will move between different asset classes to balance their portfolios given the new information that's coming in. It's going to be very dynamic. Yeah, it's going to be very dynamic. I mean, that's a nice word to put it. It's going to be very volatile.
Thank you. And Devang, what's your point on that?
Yeah, again, I agree to a large extent. I think institutional capital understands the 7 to 9 year horizon of PE and VC funds better than retail investors. And in difficult economic times, I think people become very defensive at a retail level. So, of course, even the dry powder is less there. So they tend to become more defensive, and they view the startup eco as being even more risky than an already volatile stock market, property market, gold, or any other asset today is risky and volatile, and startups are viewed as being even more difficult to digest. I think institutional capital will continue. In fact, it will become even more prominent in many VC and PE plays. So that is one aspect of what you asked. I think from our standpoint, again, it all depends on the opportunities and really what consumers are going to be willing to pay for in the future, which I think there will be a broad societal shift towards products that ensure that we live in a healthy environment, in environments which are clean, green, cruelty-free, and that ensure that we live healthily, really, and try and preempt disease. So I think startups that help realize those situations will make for very interesting investment opportunities.
Thank you, Devang. And David, what are your thoughts on that?
Yeah, forgive me. I'm not controversial for the sake of being controversial, but I think there are probably some other points that need to be made. For sure, I agree with the points about the marginal capacity of the retailer to invest in light of a systemic change in unemployment. I think you need to think a little bit more about what retail is. There are various components of retail. Nobody's really talked about, I guess it wasn't a question, high net worth or sophisticated, and their liquidity options in the current environment, because they've been a very important part of both angel investment plus indeed LP commitments. I think the wider point that everybody needs to consider for our ecosystem is what is the nature of capital going forward? Are we going to continue to be running closed-end, time-bound funds with very little secondary liquidity? Or are we going to pivot more to a structural shift in longer-term evergreen funds with a greater degree of secondary market liquidity, which really requires a far more joined-up approach across the world in order to do that? My guess would be that that's exactly where we end up over the course of the next 10 to 15 years. I think what is clear to me is that we will see a shift to more patient capital over the course of the next 18 months. I think that's partly a socially responsible and conscience-led output of COVID-19. And I look forward to that, because I'm going to be honest, there has been nothing that has frustrated me more in the last 2 years than another fintech this, another fintech that. Fine, I understand that people are trying to generate returns. And if the alpha on the portfolio is very specific to something like fintech, fine, that's great. But that's not what venture was created for. It never was. So, sorry to get animated.
Thank you, David. We appreciate the diversity of opinions. That's why we have diversity in our panels, and people of different backgrounds, different types of firms, VC firms, angel investors, family offices, and other types from various regions of the world. And it's good that we don't have any common opinion to share, but better to have a panel discussion to see the new ways out and to see where the new opportunities are. And I will introduce you, my co-moderator for today. It's Adrian Niculescu. Adrian, could you please introduce yourself?
Hello, everybody. before introducing myself, I see as a big opportunity to create a challenger for Zoom, because I stayed like 20 minutes back and forth to enter today. And it's an amazing platform. They got a lot of the market, but they need some challengers right here, right now, I would say. So my name is Adrian Niculescu. Happy to be here. I was supposed to come from the beginning. I'm involved in a few projects. One of them is the Dubai-based company accelerator and incubator, Faster Capital, and I work as a regional director for UK and Romania. Also, I'm involved in Cloudcoin Consortium, post-blockchain digital currency, where I take care of communication outside Canada and US. And also I'm involved as a mentor in Virgin Startups program in UK. Just to share a little bit of my opinion before taking over the moderation and the next questions. I see huge opportunities in work from home types of infrastructures. We will see huge shifts in the job market and the talent market. Also, we'll see big shifts in how people are purchasing products and services. So I will bet a lot on these areas. Regarding the retail investors and institutional investors, this pandemic period appeared after 10 years of summer in business. So most of the institutional investors, they are very well capitalized. Some of them did some mistakes. We will see. I'm following the case of WeWork, and we all see what happens there. What I see very interesting in Europe is that there are new laws regarding crowdfunding, protecting more than before the actual retail investors. And actually, there is a company in Romania doing crowdfunding. They sell equity starting with 2,500 euros as the ticket for investment. And when they put an ad for an investment, they usually sell out in hours. So there are a lot of people, regular people, middle class, let's say with more than median income, who have savings, and they want a piece of the action regarding startups and regarding the new world, which is building today. And right now, if you allow me, I would like to help Nadia with the moderation, and we go to the next set of questions, which is, do you expect a pickup of interest in investing and consolidation roll-up plays? Will there be an increase in distressed assets? And the second one is the community of a startup going out of business as investable opportunity. And we'd like to start with Zachary, please.
Yeah, so by and large, I would say yes, there are going to be a large amount of roll-up opportunities from an IP standpoint. I think that there will be a great number of startups that might have had a great foundation, especially those that aim towards large social gatherings, those that are looking to organize specific industries that I believe will start to be more managed by government. So for example, when you see healthcare devices, I think there will be a large opportunity for roll-up plays for larger pharmaceutical organizations. I think you've seen with Rapid LLC here in the US, just from a syringes standpoint, become one of those, I guess, benefactors. I also think that we do have an opportunity here for smaller organizations to become scalable very quickly. And I think the same example demonstrates that with small LLCs being able to provide emergency services and being able to pivot their focuses from a business model perspective much quicker than the larger forces at play, those being pharmaceutical companies, those that are heavily regulated. So I do see that niche being something that can be both exploitable for the retail investor, but also an opportunity for larger organizations for roll-ups when it comes to cheap IP that is scalable.
Thank you very much. Next, Devang, please.
Yes, thanks, Adrian. There will be opportunities, as Zach mentioned, startups predicated on social congregation of any kind or any adjacent services are going to be in deep distress over the next few months. So either they find a way to extend the runway and survive, or become acquisition targets. That's pretty inevitable. By the same token, startups that help perpetuate, as someone mentioned, work from home, clean work environments, preempting disease, anything that makes our lives more safe and workable in the future, those are actually going to thrive, I think, in the upcoming months. So it depends. The startup eco is pretty broad. You know, there's some startups that will actually emerge from this and help create solutions for the future, and then some that will consolidate into M&A plays or other kinds of distress situations. So it all depends on where you are and how well you execute.
Thank you very much. Next, David, please. Your views on these questions.
Yeah, I mean, I think what's been put already is very reasonable. You know, we're in a buyer's market. I guess the only thing I would add to it is, you know, distressed asset sales are distressed asset sales, but you know, the key component of a lot of this IP is the people. And so, you know, you can buy a distressed asset. If you can't retain the people and retain their motivation, then you shouldn't pay for it. And so structuring these deals, albeit at valuations which will be coming down by 50, 60, 70, 80, whatever the percent, to incentivize the management to work with the acquirer going forward to maximize the opportunity, I think is critical. I guess that's all I'd say on it.
Very interesting point of view. So many people, when are doing acquisitions of distressed assets with teams, they don't appreciate a lot the human capital. So this, I would say, is very important.
Well, we haven't yet got to the point where there is no human capital in the world. You know, we're doing a rather good job of disintermediating ourselves as a species, and probably rightly so. But you know, we rely on people. People make things happen. People inject bias. People design AI, and it would be very tempting for particularly private equity, with all of its dry powder at the moment, to come and swoop all of this stuff up. You know, and what they'll probably find in 18 months, 2 years' time, is that the stuff that they've swooped up has nothing behind it, because everybody's left. So that would be a risk.
Thank you very much. Next, Abhijit. Did I say correctly?
Yes, that's correct.
Okay.
It's a little complex name. Yeah, thanks. I think it's quite an interesting opportunity for both startups and investors. You know, either startups have two options: either they will pivot and, you know, figure out a new sector or a, you know, product to survive, or they'll have to find out a consolidation play, you know, to manage their cash flow. And otherwise, it's very hard time for these early stage startups to even survive. The fundings will get delayed. I can already see the startups which are writing to us, a lot of valuation correction has happened. So a lot of startups are on their own reducing the valuation by at least 20-30%, without even asking. So that will make it much more exciting for institutional investors, ultra HNIs, corporate to come ahead and participate in these early stage startups, maybe by acquisition or investing, which was not happening before. So I think it's a boon in I would say a bad situation, but it's a great opportunity for both sides. Thanks.
Thank you very much. And last but not least, Anup, please.
Yeah, thanks, Adrian. I pretty much agree with the panel. Look, this is a buyer's market. And if you happen to be a company which is going to be having a runway which is short, the shorter it is, the more the panic and the more the opportunity for you to be part of this consolidation or roll-up plays. And investors are going to be pretty keen to retain the value that they have had pre-COVID through an investment by either merging or doing some consolidation activities, talking to each other and figuring out whether holding on to a number 4 or a number 3 player at this point of time is going to be more meaningful than just wrapping it up with one of the existing players in the system. And of course, look, various companies, it's no secret that pay cuts and team cuts, layoffs, etc., have happened around the globe in large companies, and therefore even smaller companies are going to be at the receiving end of this, and therefore this is going to be a wise strategy both for investors and the founders to be able to hold on to as much value as they can and to get a longer runway by combining with some other entity which is more successful in terms of timing, and they don't have that kind of runway left. So there is going to be an increase in some distressed assets, and there is going to be opportunity over here for investors to engage in such plays. Yeah, and we're certainly doing that at our end as well.
Thank you very much. Just to add an idea, there are many areas where basically we see a bubble, and the evaluation game where there are multiplying factors not related to the actual income, just predictions in the future, is sometimes is just a balloon with hot air. And in such periods, you will see the difference between the startups having healthy business models, and they have the possibility to thrive and even to be scaled, and startups with not so good business models. Some of them will become distressed assets, and nobody will be interested to pump money in those directions. So will simply go bankrupt. And some others with a good team, with some other resources and pivoting a little bit, will be able to thrive again. It's like, I don't know, there is a 2% difference between something great and something bad. It's a very, very, it's like when you want to hit the target with a gun. There is a very small distance between hitting the target and missing it. Nadia, can we start now the
yes,
the
sure.
pitch? The pitch.
Yes. Now we are ready with the pitch competition, and Giovanni Buono, CEO of FriendsFi, are you ready to present your project?
Yes. Hello, everybody. Thank you for having me here. Can I start sharing my screen?
Yes, sure. You have your 5 minutes to go with your elevator pitch.
Okay, tell me if you can see my screen now. Yeah.
Yes, perfect.
Okay.
You can start.
Okay. So, okay. Yes. So, what is FundsFi? FundsFi is let's define it as a 360 wealth management platform for the affluent market. And for those who are not familiar with the banking segmentation, basic affluence are all those people who has between 50 and 500 liquid wealth to invest and saved. And today, this is at the most, let's say, the most underserved segment of the banking, because they are treated like normally retail customers, and basically they don't have access to quality products, so they have the same investment product of the retailing banking. And normally, even when they have access to the let's say good quality product from renowned company like Edmond Rothschild or Pictet, PIMCO, normally the minimum ticket to invest in these products is very high. They don't have qualified advisory services, so normally they are advised by the employee of the traditional bank, which sometimes has less financial proficiency of the same customer. The fees that they have to pay are very high, and normally the technology used to access this product is not like the cutting edge technology, like for instance the one provided by the challenger banks for retail market. So we try to solve all these pain points to put in one product, an investment marketplace with the most exclusive product, like the private grade investment funds, all the typical digital challenger bank features, and a digital channel to independent financial advisory. Okay, so the business model is very simple. We have like a free plan where you access to some of the feature of the product with a zero fee, but with small commission on some services, or a free commission on every service and product, but a subscription fee, like a Netflix. Okay, so a fixed amount you pay every month. So let's say this is the main revenue stream. The main revenue stream is from the monthly fixed fee, and then you have additional for some premium services like content, the advisory services, and also some extra revenue from some advertising partnership with some partner. Okay, this is our expectation, our business plan in terms of revenue and EBITDA, and this is our positioning in terms of competition. What we think that we as Fundsty, we are different from the new, let's say, digital the product, because they are focusing very on, either they are focusing on a different type of audience, on a very retailish audience, or they are offering some investment product, but they are centered on just one product. We're very agnostic in terms of product. Actually, we can integrate other investment product for other so-called competitors, and we are focusing on the affluent investor. So this is the main difference from the other player in the market. This is the team, so it's like some mid seniority, and it's more than names. I just a very quick picture on where we come from in terms of industry and companies. This is like, let's say, the how the tech and business operational structure of our company, which is basically we have a strong technology core, but we are partnering with some leader for some specific product, but we package everything in order to offer a kind of unique user experience and very smooth. And what we achieved until now, we have now a complete product with all the features we were planned during the last years. We made a commercial launch, let's say pre-commercial launch last October, just to fine tuning and adjust the product, and we achieved the number that you can see on the screen, some minor amount of customers, etc. In terms of funding, we raised 1.5 million, basically from friends and family, and an investment firm, and a small seed venture vehicle. The valuation was 3 million. We are trying to find this bridge financing, mostly this 400K. This will serve basically to launch a huge digital marketing campaign, have the initial KPIs, and then prospect the company to Series A venture capital. We are in touch with a bunch of them that are very interested in the product, but they need the initial KPIs, relevant KPIs to evaluate the business model. Very important here, the difference from I finished, okay, but very important to highlight that we already have revenues for around €9 per customers. That this is normally higher on any digital platform or digital challenger bank outside, at least in Europe. Because most of them are basically not able to monetize, and they need a really huge customer base to become profitable. Meanwhile, Funds5 with around 350,000 customers will be already profitable. I finished. Thank you very much.
Thank you very much. And the second project is represented by Venkatesh. Venkatesh, could you please introduce yourself and your project?
Hi, everybody. Thank you for inviting me today. My name is Venkatesh and I am the CTO of Spaces. And should I start with sharing my screen? Yeah. So Spaces is basically an ecosystem that brings professionals to introduce them to the personal and professional shared spaces. Now, by that I mean that this ecosystem would be powered by a token, wherein we would be using smart contracts on the blockchain, and we would be having our Spaces app to connect all the owners and renters out there for the shared spaces that they have. So what Spaces wants to do is bring about co-living and co-working into one place, providing all the amenities and building a community where they make it very trendy, and they engage all the people together so that they can combat loneliness. Now, some of the benefits for those who hold our tokens are that they would be getting discounts at preferential rates for all the tokens that they buy, and they would be monetizing on the same, which I would explain how exactly our token works. Now, obviously, those who want to use those tokens and our shared spaces can go for it. And if they don't want to access any location, still they can rent it out to others who are in need of those tokens and monetize on the same. Moving on to the token economics, the cost of our token would be 10 cents, and the number of tokens would be 300 million. The value of the token is 30 million, which we are planning to raise through an IEO. The cost of renting the token initially would be 0.045. I would explain the calculation later in the next slide. Now, there are two scenarios. So the first scenario, the owner actually owns 100% of the tokens. So let's say the owner owns 22,500 tokens, right? Now, he will get an annual discount of 2,250 pounds. Now, this is basically calculated based on the 15% slab, wherein the monthly discount he would receive on the rent would be $187.5. So if you see in a year, he would be receiving a discount of $22.50 on his rent. Now, if you see the second scenario, so the second scenario is where the owner rents out his tokens on the smart contract in the blockchain. So here what happens is the rent would be whatever the amount is, let's say $1,250. Now he would get an annual discount of $22.50 based on the amount of tokens that he holds in his wallet. Now, when he owns 22,500 tokens, he would be entitled to a discount of $22.50. Now, when the owner wants to rent out his tokens to the renter, what happens here is the discount that is received annually, which is $22.50, is split between the owner and the renter. As you can see the numbers, there is $1,012.5 for the owner, and there is $1,237.5 which is which they can redeem as a discount on their rent. So further, the calculation is such that the owner makes 45% and the renter makes 55%. Now, this is a token price projection where we have calculated it for the number of rooms. Now, if you see for one room, after the cost of the room, if it is $1,250, the revenue before discount would be $15,000. Revenue after the discount is used, which is where you take out the $2,250. So that would be a revenue of $12,750. So let's say the savings on the account, the savings that he receives is a percentage of 15%. Now he will receive a yearly discount of 20 to 50, which I explained in my previous slide. Now, the tokens that he needs to keep in his wallet are 22,250, and total number of tokens for all the rooms. Now, we have taken the first scenario in the table for one room, and so that is why he just needs 22,250 tokens. The total number of rooms here, the total number of tokens obviously is 300 million, and the rental value is 0.045. In the first scenario, he would be making a total rental income of 1,013 as an owner. Now, the return per token as in percentage would be 0.00338. This is in the first year. Obviously, it is the token is not going to make that much return in the first year because of the number of rooms. But as you see, when it goes up to 1,000 rooms, we make 3.3% return on the token. And when you make it, when you scale up and you get like 10,000 rooms, we would be making nearly 33.7% return on our token. And that is the reason why owners would want to stack their tokens, and so is the same case with the renters. Now, why would other shared spaces partner with us? Because this is where we want to start off with our. This is where we would actually want to start off by partnering with other shared spaces who are there in this space from quite some time, and this has actually started. A couple of years, and this is an emerging market. Now, they would get a chunk of tokens at a discounted price. They would get access to our curated community of spaces that we would create in the IEO. We would also market their spaces, their shared spaces on our spaces platform and app. And as the price of the token goes, while the number of shared spaces on our application that are listed keep increasing, they will make a profit from the token. And this is just a mock-up of our app, which is the sign-in and login page. Now, there's a discount mechanism, which is part of our the spaces application. Now, when the person actually owns 0% of the tokens, he would be making a saving of 8.3%. And when he would be owning when he would own like 30% of the tokens, he would make 10.3% on his savings. When he owns 70%, he would make 13%. And when he owns 100%, that's when he'll have 15% discount on the money that he spends. So now, as you can see, the savings keep increasing as the percentage of the token increases based on how much they stack in their wallet. So we are planning to have strategic expansion with the collective in UK, which we are in talks, Co-Live in India, Bangalore, and Sun & Co, which we are yet to explore. Now, the last part, which is the interesting part, is our Spaces app. So the Spaces app basically is the, so the Spaces app basically is the app which would have all the tokens, and it would be powered by the smart contracts. As you can see here, there is an owner's profile and we have a renter's profile. Now, what happens in the first phase of our application is that owners would actually list their spaces, and renters would check those spaces out, and they would just go ahead and hire. They would go and rent those spaces by paying fiat currency, which is a normal business model in the market. But in phase 2, what we plan on introducing is the Spaces token. Now, what owners would do is they would send tokens to their smart contract by buying tokens in the IEO. They would send the tokens to the smart contract, and they would earn discounts, which is 45% discount that they would make 45% of the total discount that is being availed. Now, if you see the renters, what the renters would do is they would check out how many available tokens are there in the smart contract at that point of time that are sent by all the owners, and they can actually buy those tokens, and they will be entitled to a discount. So, for example, there is a shared space by an owner where he was paying $1,250 initially. Now he would be paying 15% less. So he would be paying $187 lesser when compared to initially what he was paying. So that is his saving per month because he has 22,500 tokens. Now, so initially we would be just bringing owners and renters on board, and later on we would introduce this concept of token, telling them how they can actually make money from the savings, where they can actually make money by just stacking tokens in their wallet. So let's say initially the renter was paying $1,250 to the owner. Now, when he owns 22,500 tokens, he will be entitled to 15% discount. Now, when he gets 15% discount, he can either transfer money in fiat, which is 11 around, which comes up to 1117 or something of that sort. He will be paying that amount either in fiat or in Bitcoin. But to avail the discount, he needs to keep the tokens in his wallet. He cannot use those. He cannot use them for anything else. He needs to keep those in the wallet so that he will be entitled to the 15. How many tokens were sent by the owners, and how many renters have used the token, and based on that there is a price that is calculated. So total amount, the smart contract would calculate the total amount of tokens received by renter, and that would 0.85 per token. So this is the model of Spaces, and how exactly the app would work.
Venkatesh,
from
could
that,
you
we have
wind around? Yeah.
Yeah, pardon? Hello?
Could you close the presentation as well? Because it's almost 7 minutes already.
Okay.
Just finalize.
Yeah, I was done anyway, so yeah. Thank you.
Thank you, everybody. So you have your evaluation forms ready, so please send them to our host for today, and I will give a round of questions so that you could also ask your questions directly to the questions. Anu, are you ready to start with your feedback on the projects you've seen today, and maybe some of the comments for each of them?
Yes, why not? Thank you, Nadia. Giovanni, what is going to be your go-to-market strategy for addressing the target audience and acquiring the consumer at the lowest cost possible? And do you think this is a real time of opportunity, maybe, when many people are working from home and are almost contained, and you can know where they are, they have more time on their hands, they're not going to the pubs, so yeah, want to have your point of view on their consumer acquisition strategy.
Yeah, so initially what I would want to do is I have a pool of people who are actually into property, and they have their buildings, and they have their apartments and flats which they actually rent out. So I would bring them on board and ask them to list their spaces on my application, and at the same time I would also build a pool of I would advertise online by creating Facebook ads, etc. And I would bring on customers, wherein I would show all the listed spaces by these by the collective, maybe a few hotel owners, maybe Airbnb owners, and all that from my network. I would do it by pure marketing on through Facebook ads and Google AdWords and YouTube videos, which we have created almost 2 YouTube videos already. So we would build our pool like that, and then we would obviously tie up with those who are already in the space, but they're not into the blockchain and they don't have any token for their ecosystem. So we would introduce our token into their space as well, telling them how they can actually benefit by stacking our tokens into their wallet whatsoever. So that would actually create a demand for tokens, and that would push the price up. And as the number of rooms and owners increase, you can see that at 10,000 we would be making like good 33% return, which is actually really good. And in the current situation, market situation, I think it's this is a concept which no one is doing at the moment, and maybe because they are looking into they're just working it out the traditional way. So that's why I've been contacting some in the space, and I'm trying to introduce this model to them so that they can come and list their shared space.
Thank you, Venkatesh. And Giovanni, would you address this question as well from Anu?
Yes, thank you very much for the question, Anu. So basically, the strategy will be mostly addressed through digital marketing and partnership with affiliation, because I think most of our target audience, some of them is already using digital channel to look for investment opportunity that provides some decent yield on the middle long term. But there need to rely still on some human factors. So what we try, and without invest much money at the moment, it's some affiliation program with some so-called, let's say, influencer in the financial investment space. And this normally works very well. We have some partnership with Finance Ads, which is one of the leader affiliation network for finance industry in Europe, and some similar partner more focused on local markets in Italy and in Spain. And normally these kind of tools are very well, they function very well to lower the cost for acquisition of the customer. So I think this is what we also realized in this 2-month COVID, and it was so surprising from perspective, but not so surprising that, as you mentioned, that people stay home. They have more time to look at possible investment opportunity. They take more time to analyze the product, and actually they are getting used to invest remotely through digital platforms. So I think here there is an opportunity to an increase in investment through this platform, as far as you provide a mix of this human touch, like, you know, guidance, videos, like webinars, etc., that, you know, people can get oriented. Actually, one of the mission we are pursuing is also kind of educate and elevate the financial literacy, because most of these so-called affluent customer, especially in the Southern Europe, when they have, you know, 200, 300Ks, until now, what they do is buy a small apartment and rent it, trying to use the Airbnb models. But, you know, this kind of business will receive a huge hit by the COVID. A lot of people see in real estate industry, they see there will be a tremendous shift in those trends. And I think people will look for alternatives way to generate the same yield in a mid to long term, you know. So.
Thank you, Giovanni. Anu, would you comment as well?
Yeah, thank you very much, Giovanni. I in fact, landed up asking the same question to both of you just to get an idea. But I totally agree with you that asset repricing and asset yields, especially in the real estate world, is going to be a challenge. And therefore, investors who traditionally looked at only that instrument, and particularly your customers that you're targeting, will be forced to look at other options. And we've all seen the growth of tech stocks on the S&P 500, and you know, Zoom has just zoomed, and the more we use Zoom, the more it zooms, right? So I think that's happening around the world. So if you're going to come up with a tech-based wealth management solution for those people who can't afford a relationship manager, but have an automated experience to access yields while they're literally sleeping, then that'll be something that'll be truly look forward to. And I came across another startup in the same space, which is providing Indian citizens, you know, access to the European markets. So I think I appreciate your response on that. From Venkatesh, I was just going to ask you that, you know, is your company going to take longer time to take off? Because co-living, co-working isn't in anybody's mind, and I understand the combating loneliness part of it, but people are preferring loneliness at this point of time as an antidote to what's going on. So it kind of directly sort of impacts, you know, how your business kind of takes off. So any comments on that?
So what I would like to add on that, yeah, in the COVID situation, maybe it is, I mean, everyone are at home and stuff. Now, what if I said that, you know, you can move into a location where you actually have everything at one place. You don't actually have to go out of that location. For example, if you just check the concept of the collective, they actually have all the amenities within their building. For example, they have an office space, they have a restaurant, they have a gym, they have even living spaces, en-suite rooms and all of that. So when you have all of that, then there's actually no need for you to even go out. And what I'm trying to introduce here is nothing new. I'm not trying to refurbish anything or that sort. I'm just trying to introduce technology. Like you said, there's a lot of scope. I'm just trying to put in a token into their ecosystem and where they can monetize with that token. And obviously, those who are renting it, those who are owning it, both of them are going to make some money at the end of the day as the price appreciates. And they're going to gain discounts on just by stacking the tokens. And by stacking the tokens, obviously, it increases demand, and we will be making money from that.
Thank you.
Thank you.
Anup, do you have another comment?
No, please carry on, Nadia. Thank you very much.
Thank you. And Abhijit, what's your overall opinion, and would you like to address some of the points to each of the projects?
Yeah, I think as Anup also pointed out, for Venkatesh, it might be a little tough right now to gain market traction and get investors in current scenario, because people are not going to move out of their homes at least for maybe 6 months, 1 year, and be very careful. So I'm not sure how the co-living and co-working part is gonna pick up in recent times. But the investment is definitely a sector which I found interesting. That idea might pick up well if they target the right kind of customers who have extra money to invest right now, and target digital, which is much cheaper compared to physical promotions. So that's overall my feedback. Maybe Venkatesh will have to maybe figure out a way to raise money and innovate for next few months, and keep the customers exciting, so that once the situation becomes better, they can come on his platform. Thanks.
Thank you, Abhijit. And Adrian, what's your opinion?
Regarding Fundsty, I see a huge trend in democratization of investments and adding more technology to the process of investments. So I see both the opportunity, how the pitch was created, very available. Regarding space, it was a similar project presented in one of the previous sessions. My feedback is too much focus on the token itself, and too less focus on the business model. So, for example, let's say I liked at Fundsty, it was mentioned, if I understood correctly, the first round was the 1 million was friends and family round, right? The seed round. So I liked very much how it sounds. It was a friends and family 1.5 million. So I was imagining me calling my cousin, asking, "Okay, I'm raising 1.5 million. How much can you give me?" And so it was pretty cool and very normal. With space, basically you are raising, let's say 30 million. 30 million. When we are raising 30 million, I expect also to invest in some facilities, in some properties of your own, to create some assets. In a normal property market with 30 million, you can start something, or at least you can do a rent-to-rent model, which I'm not a big fan of, especially for co-working and co-living. And as I said, I was expecting a bigger focus on the business model itself. With a huge opportunity, that niche where space is building that project, huge opportunity. Many players will be there, and is a very good reason to differentiate yourself from others. Thank you very much.
Thank you. Zachary, do you have a comment?
Yes, I would kind of echo the sentiments of the previous comments. From where I sit, number one, I see COVID as being a tremendous detractor potentially from spaces just short term, simply because individuals can't travel internationally. And the way that I saw travel as open and free and really as inexpensive as it was to the consumer just 3 months ago was something that would support that idea that now with the retraction or contraction rather of the airline industry, with fuel being so cheap, it not being beneficial to offer as many flights, and the social distancing necessary on those travel services, I start to see that as a bit of an issue for the business model moving forward. For Fundsty, I would inquire about the advantages that they see either expanding or contracting with major firms such as Fidelity, Charles Schwab here in the US, decreasing and in some cases removing their entire fee structures, how that impacts such initiatives.
Okay.
Thank you. Yeah.
Okay. Thank you, Zachary, for the question. So as I mentioned, I mean, the firm you mentioned, as you know, they are not very active on the European, South European market. At the moment, we are basically, for instance, very recently, we integrated some Vanguard funds in the platform. So as I mentioned, we are very agnostics in this sense. And what we are doing probably different from some of this platform is we work with a kind of a like boutique platform. So when you access the app, it's not like probably you know them all funds where you found thousands of products. You found maybe 20, 30, because what we want to do is give a minimum exposure to some specific market or asset class. So these new buy investors, they have an option to invest, for instance, in Asia or in Japan or in tech market or maybe some thematic like some renewable energy, but they don't have like 1,000 options. Also because I think this is the customer journey or the kind this evangelization or educational journey that we're trying to provide for this new buy investor that maybe make us a little bit different because who approach, I think that the US market is a bit more mature in terms of digital tools to invest in different instruments. I think Europe is way back in this, and there are many platforms that are addressing, but some of these part of this market, but they like Nutmeg or, for instance, Liquid in Germany, but I think they are used to address the high end of this affluent market. We are going more to the lower end. So, and I think these people really need to this, journey companion that you show them that they have a couple of options to invest, and they prefer probably this kind of approach instead to have a huge offering and nobody that can really help to address to which is the best investment for them. I think that's an important part that I maybe mentioned just for a few seconds, the advisory part. If you look from the other side, we are also offering to the independent financial advisors, a channel to cheapen their services. So in Europe, most of the independent financial advisors, they are looking to have a bunch of few customers very wealthy because they cannot afford from a cost perspective to address the lower end of the affluent customer. And meanwhile, through our platform, they can have now a tool to offer their service to a pure digital channel. And I think this type of audience prefer a smallest environment with less product than this huge platform they're offering. Because if you are like a very proficiency from a financial perspective, you can create an account on all funds and basically you can find the same product we are offering.
Thank you. Zachary, would you like to comment on that?
I appreciate you adding that clarity, and I think for everybody who's tuning in, that gives some dramatic clarification if you're coming from a developed country versus developing. So I appreciate that feedback.
Thank you. And David, what would be your...
Nadia, I would just like to answer Zach's question. Zach, yeah. So the thing is that Adrian and Zach, we would be raising only 13.8 million, which is half the total supply that we would be releasing initially. Now, the other thing about COVID is that right now all the spaces in workspaces, like even in WeWork and all of that, is just I mean, no one's using it and it's just left empty. Right. So what we would do at this point of time is take advantage, release the right ads for people like WeWork or WeGrow in India, etc., who are having empty spaces to come and just list their space on our platform. Like that, we would actually build up our database and get more people on board. And as soon as COVID is relaxed, we would have a lot of people looking for renting out spaces, or maybe their contract is finished and they're looking for something else which is much cheaper. At that point of time, we have nothing to do with the price. We just want them to store tokens into their wallet, right? So we don't have any demands with what price they would put up on their property, or whether they would hike it or whether they would lower it. It doesn't matter, because all they need to do is take our tokens, stack it, and then receive discounts and make money at the end of the day, which is what they would want to do. So this is something I would like to I wanted to tell you, that we can take advantage of the COVID situation, do the right marketing and build our database. And once the COVID is relaxed, we would definitely have a huge market base, and we would have a lot of options for people who want to rent, because at that point of time they would be looking for spaces which shared spaces, and communities where actually they can rent out rent at a cheaper cost. And at that point of time, I think spaces would have a good advantage.
Thank you. And David, do you also have a comment?
Yeah, thank you both for your presentations. I guess I'd say to Fundsty, it's a very competitive market, and you got Nutmeg, you got Wealthify, you've got all of the main brokers, all of which are trying to build online presence. Everybody's going to be chasing customers in this market. Your customer acquisition costs are going to be higher than you anticipate, and you're going to need a heap of money really quickly. One suggestion, you might want to think quite specifically about your target demographic. It's easy to say we'll go for the lower hanging fruit because other people aren't going for that, but actually there's no capacity for them to spend, so I don't agree with that. So yeah, Venkatesh, thanks for your presentation. Sometimes I wonder why people do blockchains when they're not necessary. It may be the case that a smart contract-based platform could be scaled for what you're doing. I agree with what all of the other panelists have said in terms of the restrictions on travel. So it's going to take you a long time to get there. The one thing I've been looking for as a holy grail for quite a long time is somebody who can actually create a time token. A token where people can exchange value for sharing time with each other in a meaningful way that would be curated essentially by the blockchain oracle. If you talk about loneliness and depression and shared exchanges and that kind of thing, for what it's worth, I think we have a responsibility to try and develop something along those lines. Before we do it, or somebody else does it, the social media giants will probably hijack it. We do actually have a business trying to do this at the moment. It's inherently quite problematic because, of course, what you have to try and work out is what is the medium of exchange? How is one person's time equivalent to another person's time? So it's intellectually, it's very challenging, but good luck with your project. And when you need to pivot, which you will, think about that. I'm going to have to go now. It's been a pleasure meeting you all.
Thank you, David.
Thank you.
And the final question for all would be, how do you find this type of online format of panel discussions and pitch competitions? And is there a place for your investment strategy for this type of communications, which are now had during this COVID period? Do you think that it will continue further on? Zachary?
Yeah, so from where I sit, I think this is the greatest utilization of our time possible with such a difficult situation, locking and constraining so many different groups of people in so many different ways. I believe moving forward, hopefully restrictions lax where we are able to get together in larger groups. But that being said, with the type of innovation that is occurring, I believe this could be over the next 10 years where individuals start to gravitate to, given the complications and really the concerns that we have with travel moving forward.
Thank you. And Venkatesh?
Yeah, I think I mean there's a lot of benefits with COVID apart from just the negative aspects. I think I have done a lot of brainstorming with my team. I've learned a lot online with regard to marketing, technology, and operations, and from business strategies point of view. Uh, I mean, I have actually utilized my 2 months, is what I would say, because I did pitch with my Spaces plan last month in the month of it was in the start of April. At that point of time, I think Adrian was there, but there was nothing in the plan, and people were actually telling me that you need to work on the UI UX, and there is some scope out there because you can actually do something and make a change maybe in that aspect by working on the UI and UX of your application. Now that's what I did basically. I took that feedback and I implemented it. I put in all my effort. Now obviously I'm going to take this feedback and again see how I can improvise my model and what I can do to penetrate the market and make my model work. So for me, I think these online webinars or online sessions are really very useful because at least you're not just sitting at home, but you can interact with people off and on, and you can share ideas. And I believe that network, money, and knowledge is something which it multiplies as you share it, and not just keep it to yourself. And this is a good forum for us to like have more sessions maybe, and get more feedback. Maybe see a different presentation of spaces when we have it the next time, if you all are there, because I will obviously improvise on it and implement the feedback that I've received from you. So thank you, everybody.
Thank you. And Adrian?
I see this format very valuable, and I believe in the future around 60 to 70% of events will be online, and 30 to 40% will be in the real life conference we all know. And it's very easy for a company like yours to scale these events and to test new ideas without huge costs. And for all of us, the kind of information which is shared here, if you take it from regular consultants, it has a huge monetary value, I would say. But of course, you need to invest your time, you need to invest your attention, and to take some real information out of it. And also for the startups, pitching is a very good way to get feedback, to implement, and to improve what they are doing. So when you are pitching in real life, the investors to be more and more successful. So I see them very valuable.
Thank you. And Anup?
Yeah, I think this is part of the new normal, as I say. So we are going to get used to being more productive and coming together on a platform like this. And this is intercontinental. So this is going to be the new order. And we're going to see real estate also getting reimagined and refashioned with people wanting spaces to maybe do Zoom calls or video conferencing like this in different time zones. And this is going to be the new way of working. Unless you have to meet, you can possibly be more productive over platforms like these. And we will learn as human beings to get more trusting through a conversation, which happens, quote unquote, face to face, but maybe through a platform and not meeting the person in person. So I think that these are changes coming forth, and I really appreciate the Latakan platform for doing this.
Thank you, Anup. And Abhijit?
Yeah, thanks, Nadia, for inviting me here, first of all. And we have been anyways, doing a lot of online pitchings from the last 2 months. And most of our events, which we do for startups, have already moved online. So I think, with the reduced marketing cost and with the, more reach, as Adrian said, we would be also moving maybe 60-70% of our events pitch days to online, and maybe 20-30% large events we would do offline. So I think this is the new trend now. It's cost effective. We can reach more people. We can devote more time. So great initiative by you also. Thanks.
Thank you, Giovanni.
Yes. Can you see me? Yeah. Yes, I think this format will be very common in the future. I mean, people is getting used more and more to really connecting in remote. It's more compatible I think people's getting even more productive. I mean, you avoid displacement from one place to another, and this saves times and makes sometimes this kind of a more efficient. I think they can also enlarge the audience. Sometimes you just don't attend many events because you cannot be in a kind. I know. Let's imagine here I'm in Spain. You cannot be in 2 events in Barcelona and Madrid in the same day, but with these kind of tools, you can really implement the kind of ubiquity-wise life. So I think this had a lot of value in general. And I mean, for the type of audience, obviously you can put together different perspective, and this can really add value to all this conversation. So absolutely positive.
By the way, you're the winner today for today's speech competition.
Thank you very
much. So congratulations from all of us. And thank you all for participation in our today's roadshow. And we invite you also to join our keynotes today in an hour and a half as well. And thank you all. Please join our Startup Leaders Club roadshows, keynotes, masterclasses on Latoken, and also share the new formats you would like to enjoy in our VC community, where we have serial entrepreneurs, VC firms, standalone, high net individuals, family offices, multifamily offices, angel investors, accelerators, and other types of investors to communicate during COVID pandemic or not. Irrespective to the time and circumstances, we're ready to go with various forms of interaction within our community. Thank you so much. Stay healthy and find new opportunities